Rainer, is this right? I hear it's your last, well, one of your last earnings reports before you have Alfred Stern taking over on September 1st. I remember when Wolfgang Rutzenstorfer handed the reins over as well. My goodness me, I've been around too long as well. Rainer, how are you leaving the company? It sounds like you're leaving it in good fettle.
Absolutely, Steve. I have many reasons to open a bottle of champagne, not only because this is my last call, but I think if we look into the numbers, we are celebrating historical records. It doesn't matter what KPI you pick. We all have record numbers, and I think that's the best moment to look around and say goodbye. I think the company is well set to continue successfully in the future. And I think it's a nice service from my side.
That's great. And when I'm in Vienna, maybe you'll be able to give me a glass of that champagne. But my point being there, Rainer, is that we spoke to Anders Opedal. All right, a very different company, Equinor as well. But there is turmoil in the transition, and everyone's working out what assets they need to really grow, what assets they need to change as we move to a more net zero world or a more sustainable world as well. How are you negotiating that change, Rainer?
Well, I think we have set a unique strategy in OMV. We will continue to grow, but we will continue to grow now in chemicals. And I think you really cannot find any other company who is going to transform as quickly as OMV is doing, that we are moving into chemicals. If you look into the first half-year results, 50% of our earnings are coming now from chemicals. So OMV will combine the sustainability strategy with chemicals and recycling so that we prepare the company for the circular economy. And of course, we are going to increase our investments, especially in technology, that we are recycling plastic waste into the value chain of chemicals. So I think we have a good strategy that we combine sustainability with profitability and growth in our portfolio. So I'm not getting nervous.
Right, now just to focus on some of the numbers that you've reported here. Interesting, the refining margin down 47%. Some of that a function, of course, of the higher oil price, but obviously there's some COVID impact there as well. Is that number going to improve? Can you tell us a little bit about the expectations around the trend in refining margin going forward?
Well, I think we are going to see, we have seen the bottom line refining margins in Q1. We have seen a slight recovery into the $2.2 per barrel in second quarter. If I look into the first numbers published in July, we see a further little increase of the refining margins. Our main problem at the moment is the diesel demand. We are producing too much diesel into the European market, and especially the middle distillate will continue to be a problem with the refiners. We see that refinery utilization is going up, especially some FCC plants are now back into operation with higher utilization, and therefore I think that the attractive gasoline cracks will stay. All in all, I think we have to prepare in the second half for refining margin, which will move into the $3, but I think there is no further upside. And it will, of course, depend how much restrictions we are going to see in air traffic. We see jet now being back 2/3 of the pre-COVID demand. But if you look around what COVID is restricting our travel appetite, then I think that the big recovery for jet demand is not waiting us in the second half.